G'day everyone, and welcome to this InvestSMART webinar today on this, rather grey Tuesday down in the Melbourne office where I'm located. Thank you all for joining me. My name is Mitchell Snedden. I'm the Head of Portfolio Services here at InvestSMART, so I take care of all of our invested clients with us. And today what we're going to be doing is taking a look through all of the InvestSMART tools and new features that we've unveiled very recently. So right now I'm on the home page here. What I've done is just gone up and hovered my mouse without clicking on it, but just hovered my mouse on the research and advice section. So what we're going to be taking a look at here today is this research tools section all the way. So you've got quite a number of tools that we have available to our users. And so we'll be making our way through that category there today. Now, how this came about, we've been doing our roadshow around Australia. Myself, our CEO, Ron Hodge, Alan Kohler, our portfolio manager, Nathan Bell, and a few other various guests have been going around to Perth, Adelaide, Brisbane, Canberra, Melbourne and Sydney, which is tomorrow. And we've been doing presentations about InvestSMART and a few destroying a few myths along the way. Now, when we were up in Brisbane, a lady wrote on the feedback form that she would like to see a webinar on how to use InvestSMART's tools, because we did a bit of a live demonstration with them there. So here we are, a week later or 2 weeks later, we're doing this webinar. Now, as we go through this webinar, two things to keep in mind. One, it's live and it is interactive. So you'll see a section there where you'll be able to type out questions. Please feel free to make use of that and send through as many questions as you like. Now, if I can't get to them all during this session, I will send you all an email with my responses to those questions. If for some reason I'm unable to answer those questions, I'll also send you all an email with my responses to those questions as well. Now, of course, this session is general advice only. I cannot give any personal or specific advice, so please just keep that in mind as we do go through those questions. I will do my absolute best to answer them, but of course within the guidelines of providing general specific advice. So there's my disclaimer. Now, as we are going through this section here, you might have seen a bit there called Compare Your Funds. What I'm going to do is show you how to use that section, but what I'll do as well is allow you some time to maybe send in a couple of managed funds via that questions section. Send in the name of a few managed funds that you're particularly interested in having a look, and I'll look them up live as we're going through here today. So instead of getting started on that, so I can give you some time to write in. I will go in now to the research and advice section, and I'm going to show you, start off with the ETF section, so exchange traded funds. Now, during our presentations around the country this year, and if you've ever seen us before, you know we talk a lot about exchange traded funds here at InvestSMART. Indeed, the InvestSMART diversified portfolios make use of exchange traded funds. So I'm going to just click on that just to get us started, whilst you maybe take some time to write down a few questions, or sorry, a few managed funds that you want to take a look at in that compare your funds section. So here I am in the exchange traded funds section. Now you can see here, I can actually just search for a keyword. I can search for a geographical focus. I can search specifically for an asset allocation type. I can search for a management type, a star rating that we've created as well, or a category. And then you can search by market cap, yield, etc. So if I haven't hit search at the moment, so what I've basically got here is every single ETF available on the Australian market, listed by the name of its security, so ordered by the name of its security. So you can see AMP Capital there, Antipodes, etc., etc. Now, I can apply as many or as few filters here as I like. Now, why would I want to apply filters to this? Well, we believe in diversification here at InvestSMART, and exchange traded funds are a great way to achieve simple, low-cost diversification and exposure to specific areas that you might be interested in. For example, I know there's a lot of people out there who are happy managing their own Australian equity portfolio. They might have held, say, Woolworths or CBA from the float. and they're happy holding those positions, and so they've got their Australian equity covered. However, they might not have too much international exposure or exposure to bonds, etc. So using exchange traded funds is a good, simple way of getting that type of exposure. Now, that you might not have the time or the knowledge as well to go out there and handpick individual stocks in these specific areas, and maybe getting a basket of them, like an exchange traded fund, is a safer way of doing so. So let's use this tool right now to jump on in and to get exposure to international equities. So what I'm going to do here is I'm going to say let's get US exposure. Let's get some exposure to the US. Now, US, out of the developed markets in the world, now there's 23 developed markets around the world. Australia is one of those markets, and the US is the largest. Still to this day, like China and a fair bit of Asia is considered emerging markets still, so they're not considered developed markets. But so the US makes up the majority, about 60-odd% of the developed markets around the world. So I'm going to select US, and I want to get exposure to US equities. So that's what my asset allocation type is going to be here, you see. So I've just clicked on that. I'm going to scroll on down: commodities, currency, equities, fixed interest and cash, property and infrastructure, or diversified. So if I was to select diversified, I'd get a blended ETF. So an ETF that might, for example, hold equities, cash, property, etc. So I'm just after equities here to give myself international equity exposure, and for this instance, purely in the US. Now, I'm going to skip management type, but if I was to select a management type, what it would give me here is a managed fund, an ETF, or a structured product. So what this means is basically, if we selected ETF, we're looking at those real passive ETFs, so they just track an index. So for example, what we're going to see here, once I've selected go on this, the ETFs that will appear will be the index tracking ETFs. For example, they track the S&P 500 or the NASDAQ, etc., or the Dow Jones. Now, if I was to select a managed fund or structured product, what I'm looking at there is essentially that they are still ETFs, exchange traded funds, but they're actively managed. For example, we ourselves have one. INIF is the stock code. It's run by Nathan Bell, and what it is our InvestSMART Australian Income Equity Fund. So it's a managed fund, but it's listed on the stock market. So the mechanics of buying in or buying into it and selling out of it are done just like a stock on the stock exchange. So you don't have to fill out any forms or any paperwork, et cetera, et cetera. It's all done through your broker. So you can get exposure to the US here. Say, for example, if I had that via the managed funds, that's just another way of going about it. But I'm just going to use, for this example, the ETFs. Now, the InvestSMART rating. So I don't know if you've gone out there and had a look at a number of ETFs on the market, but you don't know how to determine between which one's a good one and which one isn't. So essentially, we're looking at, say there's two ETFs out there that track the S&P 500 in the US. Which one should you invest in? Well, we've developed a star rating system to differentiate between those. So this star rating system basically ranks these ETFs by things like the buy-sell spread, the management expense ratio, so that's the fees that it costs you to invest in it, the where it's domiciled, is it domiciled here in Australia or in the US or overseas, etc. So there's the size, liquidity of the ETF as well. So these are just a few things, and the tracking error as well. So how closely it follows the index that it's meant to be tracking. So, of course, an ETF, if it's running absolutely 100% efficiently, really should underperform the benchmark by the cost of its management expense ratio. So now that I've done that, let's scroll on down. I'm just going to click Find ETFs here, and let's scroll on down and see what it's produced for me. So I have whittled the world of ETFs down to just these four. So these are four that I can focus on to give myself US exposure. Now, you can see here IVV, iShares S&P 500 ETF. This is the ETF that we use as a part of our international ETF portfolio, the InvestSMART International Equities portfolio. The reason for it, it's a 4-star ETF. It's one of the highest ranked ETFs we have here. It tracks the S&P 500, which is what we want. It's very, very large. You can see that market cap, $2.9 billion of capital are in that particular ETF. And it's got a management expense ratio of 0.04% per annum. Now, think about that. If you own any managed funds out there, think about how much they're charging you in a management fee, maybe plus a performance percentage as well. So think about how that compares to 0.04%. That is razor thin. And basically, any cheaper, they'll be paying you to invest in this. So that's why that particular ETF is in our portfolio. So you can see here, you're just doing a few quick steps: the geographical focus, the asset allocation, management type, and maybe our star rating system. I've been able to whittle down the world of ETFs to just 4 to then select from. Now, when would you, the star rating system, I should say as well, does not work on the managed fund and structured product side of things. The reason for that is the star rating system is developed to differentiate between those passive index tracking ETFs. It's very difficult to get a gauge and put a star rating system on actively managed ETFs, because we're not just looking at the structure and how they're operated there, but we're also then looking at the ability of the underlying management team there to pick the right stocks. So when we're just looking at these plain vanilla index tracking ETFs, that's when we can have the star rating system. Okay, so let's move on now from the ETF section, and we're going to go down to compare your fund. And I do have a question that's popping up here, so let's have a look here and see if someone has asked a question about having a look at a managed fund. So someone has requested a Plato Plato investment management. Let's go and check that out now. Let's see if I can find it. This is putting me to the test doing this live. Okay, there's a number of different Plato funds. So I'm not sure which particular one that person was wanting me to take a look at, but let's go Plato Australian Shares Core. Let's select that one. Okay, so you can see here, all I did was type in the managed fund name or the fund manager name. You just start typing and away you go. You can also search for the APIR code. So the APIR code is a unique identifying code for every single individual managed fund. Now, it's really useful if, for example, the managed fund that you're looking for has maybe a wholesale component and a retail component. So it's like basically two separate funds, or it also has maybe it's listed on multiple different platforms and you're looking for the particular fund that you're invested in that's on that platform. The APIR code is a really, really handy way to actually find that particular fund. Now, let's go down and see the results of my my search here for Plato. So the Australian Shares Core Fund. So you can see here it's in the sector of the equity Australian large blend. So by blend, they're meaning the investment style. It's not, so you can see the general styles are, say, value or momentum, etc. This one's got a blend. You can see that APIR code there as well. And you can see the benchmark that this is being compared against, which is your standard generic Australian benchmark for an Australian shares fund, which is the ASX 200. TR means total return. So that's income and capital growth combined. Let's scroll on down and see how they've gone. So when we compare funds, you can see here, we actually compare it to a benchmark, but we also compare it to the peer group within that benchmark. Now, whoever's actually selected this one to take a look at has selected a really good fund. This particular fund, you can see it's in the blue. The benchmark is in the green. Now, if we have a comparable fund, we will compare it to the fund as well. We are in orange. That's the Intelligent Investor Equity Growth Portfolio. And then the peers, so that's the average of those 1,802 peers that also track the S&P/ASX 200 Total Return Index. Those peers are in black. So you can see here, this particular fund has done really well. I'm wondering if the person that requested us take a look at it might work for Plato, because it's a really good. It's done really well. Now you can see over the 10-year track record here, it's done 10.8%. The peers have done 10.4%. The benchmark's done 11.12%. But then, of course, the shorter time frames at the 3 years. Still marginally underperforming the benchmark, but still nowhere outperforming its peers quite considerably. Scrolling on down, I'll show you some more interesting things here. So the fee comparison. So if you are looking at different managed funds, have a look at the fee comparison as you scroll on down. Now you can see here we put the average fees charged by the peer group, so 1.79% per annum. The fee of our particular product in this instance is 0.97%. And in this instance as well, the Plato Australian Shares Core portfolio has a fee of 0.41%. So that's a really good low fee. And it probably indicates exactly why they're a good reason, a good chunk as well as to why they are beating their peer group by so much. I'd say it's the big difference there is in the fee percentages charged. And what we tend to find when we are looking at these different managed funds is we tend to find that over time, the bulk, I think it's about 76% off the top of my head, of managed funds tend to underperform the industry standard benchmarks by the cost of their fees. So that fee section is really, really important to have a look. So if you are in an underperforming fund, what you should check out is the how much it's underperformed and see if that aligns with the fee that is actually charged by that particular manager. So let's now jump on to some others. Sorry, I'll keep on scrolling down here. You can actually see then the asset allocation. This one, no surprise, it's all of Australian equities. We also compare it to the peer group average asset allocation as well. And then there's some basic information down here about the tool itself. Now let's scroll back on up. Let's see if there's any other managed funds that people have requested. Tom, who requested that particular fund, said no, he doesn't work for Plato. No problems at all, Tom. Thanks for sharing that with us. So there's no other managed funds that people have requested just yet. So what I'm going to do is go to my portfolio manager, where I've actually lined up a few funds for us to take a look at as well. So let's scroll on down here. So what I wanted to do is get a mixture of funds that underperform the benchmark and outperform the benchmark. So what I've got here, and some really good examples, I've got Platinum Asia, I've got Pangana, I've got a couple of AMP funds, and I chose the same type of AMP fund just to show you what the difference in fees does. So let me just open up these two. Now, if you are using the InvestSMART Portfolio Manager and you've got a section here and it comes up saying review your fund, what that means is based on the longest set of data that we have available for that fund, it has actually underperformed the industry standard benchmark that it gets rated against. So if you do have that review your fund sign flashing in a fund in your portfolio manager, it's not to be alarmed, because you might have invested in it at a really good time and have had great performance from it over that period of time. However, it's just saying, hey, go and actually review your fund, exactly what it says on that button, because our data indicates over the longest time frame available to us possible, it has actually underperformed the benchmark. If it outperforms the benchmark in any of those time frames, then it won't be there. So let's take a quick look at these. Let me see. Sorry, the data there is still being worked on. There we go. Excellent. So I've clicked on the wrong buttons. Excellent. Right, now we're in business. So what I'm showing you here is the AMP Capital High Growth Managed Fund. So let's scroll on down, and you can see here AMP is in blue. We are in the orange. The benchmark, which in this case is the Morningstar Multi-Sector Aggressive, so a high growth diversified portfolio will be ranked against the aggressive total return multi-sector benchmark. And there's 618 peers that do follow this particular benchmark. So you can see here the peers, some underperformed the benchmark by quite a distance. And you can see here the reason why I had review your fund over this 10-year period. It's underperformed that benchmark. Basically, let's see, pretty much in every single time frame that we've got there. Hence why it says go and review your fund. Now I'm going to scroll on down. And you can see here 0.81% per annum. The average of its peer group is 1.61% per annum. Our particular one in this instance is 0.55% per annum. But then we do actually cap our fees at $451. So you can see now if we actually go and line it up, 10.38% per annum. The benchmark 11.08. So really close there to underperforming by the differential of the fees. Now, to take that into consideration, let's have a look here at this other one. It's their Lifetime and Custom Super High Growth Index. Scroll on down and we can see fees of 1.86% per annum. So the average of the peer group here, 1.61. Remember, it's the same peer group. Let's go scroll on up and see what the major difference is. And you can see here the benchmark 11.41 over that 3-year time period, 8.74. So compounding over those that rolling 3-year period, it's probably right that it's underperformed here the benchmark by the differential in those fees. So if you are in one of these funds and you want to know more about our fee calculations and also about our research that we've done, you can click here on the Compare Your Fund page, and we can then scroll on down, and you can see here all the different averages. So the most commonly underperforming category here are these multi-sector ones. So multi-sector moderate, multi-sector growth, etc. They're the most common underperforming sectors. And you can see here the average performance and then the average fees. So they really, really closely align. The best performing sector on the whole, which is still batting at just over 50%, is the Australian Equity Large Blend. Now, to find out a bit more about it, you can see the statistics here, but we're going to scroll on down as well because just trying to find it. That we do have a white paper available where we actually discuss all of these fees and all of the findings. So if you do want access to that, I believe it's on the InvestSMART homepage. Go there and you'll be able to see next to Paul Clitheroe's face our white paper on fees. So let's now jump back into the research and advice section. Actually, there's another question here. We'll jump onto this one. The other API, yes, that's exactly right. The APIR code there, Tom, for those two AMP funds were different because they're different funds rated on different platforms, etc. They're going to have different APIR codes. That's exactly right. So let's jump on here back to the research and advice section. Now I'm going to show you something that I really like to play around with myself. I'm going to go to the shares section. Now, what I'm going to show you, and if you came along to any of our presentations in this series of events, of our roadshows, you would have seen Ron, our CEO, show you this particular section live on the day. Now, we've got a share filter here. You can search for, the individual shares that you're looking for, or individual sectors if you're looking for a specific sector that you're interested in, or industry group, etc. I like to do this just so to be looking for any interesting small cap ideas, or just to see what ideas I can generate if I've got some time to myself. I go to the changes in directors' interests. So the changes in directors' interests tell me what insiders, so we're talking CEOs, chairmen, people on the board, etc., that have been buying and selling the securities that they are actually on the companies that they're on the boards of. So you can actually search via a stock code yourself. You can search specifically for a director's name. You can go and specifically search for a sector if you're interested in that. But what I tend to do is actually use the market cap the market cap range here. So, for example, I'm looking for some small caps. I might go say 500 million. Anything. So this will bring up any companies of less than 500 million. And I can do a time frame here, say if they were buying in the last 30 days, 90 days, 180 days, or this year. Let's just stick to 30 days. Now I can go down to transaction type. So of course, directors and CEOs can be issued shares, they can be issued options, etc. So that's where they're actually just given those shares. So what I'm interested in is those who are actually buying the shares themselves with their own money. So I'm going to go buy. Now, I can also look for the actual security type, but we'll just go direct shares. Now, if I had a watch list as well, or my actual portfolio in the portfolio manager here with InvestSMART, I could click one of these buttons and it would only search for directors' transactions on the stocks that are in my actual portfolio. So if you want to do a quick check on your portfolio, I'd maybe do a quick check and see which directors are selling, because that could be a bit of a red flag. You can tick that tick box and then hit find changes, and it'll look through your portfolio for directors who have been buying and selling in stocks within your exact portfolio. So the reason why I'm looking for buy, I'm looking for those people who have been buying their own stock with their own money over the last 30 days. I've heard a saying that a director or a CEO will sell for many reasons. They might be selling for tax purposes. They might have to sell down to take profit from a position that's grown overweight in their portfolio, or they might be selling, because they've had a divorce or something like that. But then I've heard the saying is they sell for a number of different reasons. They generally only buy for one. So let's check this out. Let's go find some changes and see what companies this throws up. Let's scroll on down here. So you can see here, basically every single director that has bought direct shares in that company over the last 30 days. And so you can see this particular one at the top here, not a huge parcel, but this one of HHY Fund has bought 6,300. So you can see, you scroll on down, and I personally scroll on down and look for something more significant, like for example, this particular one. Mr. Pattinson here in Adairs bought $244,000 worth of stock in a single transaction recently. And you can also see if there is a commonality in the directors in the same company buying multiple parcels over a period of time. So I like to look at that. I then like to go out and check out the stock, see if there's been any recent announcements. For example, I know Ron, when he was doing this particular presentation in Brisbane, we were in Perth actually, found a stock where a whole stack of the directors had recently been buying. Then all of a sudden the stock within a few days went into a trading halt and then came out with a positive news, and lo and behold, that particular stock bounced about 20% that day. It was just a sheer coincidence that he was able to find that whilst we were doing this presentation live. So it's very interesting for me when I'm looking, especially in the smaller cap end of the market, to use this particular tool. Alrighty, so going to go up here now to the research and advice section again. I'm now let's jump into listed investment companies. If you are a fan of listed investment companies, this tool can be quite useful to you. You can scroll on down here. Now you can search for different categories, of course. Listed investment companies, a lot of the more modern ones tend to be blend of like Australian equities, international equities, etc. You can choose to see if they, you can filter by the ones that do charge a performance fee and which ones don't. I typically don't tend to pay too much attention to that myself. You can add an MER greater or less than, or you can do a premium/discount. So if you've seen listed investment companies before, you know that a lot of them trade at a discount to their net tangible assets. That's the underlying value of the portfolio. typically that reflects either A, the performance of the portfolio, or B, the underlying fees associated with the portfolio. So all things being equal, generally should be trading at a bit of a discount to compensate investors for the fees. But some of them, those discounts can blow out. They can go to very large discounts. They can go to very large premiums as well. So you can use this particular filter tool to do, say, a discount or a premium of, say, less than 10% or less than 15% to see which companies, which LICs are worth taking a look at if they've been trading at a big premium or a big discount, and then do some further research on those to jump on in and check them out. Now, let's go back up to the research and advice section. I want to take you through 2 more sections here. So we've been through the compare your fund. You can use the managed funds section as well to go to compare your fund. It brings up the exact same information on those managed funds as the compare your fund section does. So you can search managed funds either way. The managed fund section gives you a little bit more information though about that particular fund, whereas the compare your fund just goes over the fees and the performance. So just keep that in mind. Now, but what I'm going to go to next is a recent addition to the website, term deposits. So I'm going to click on term deposits here. Now, this one's really self-explanatory. Basically, it lets you compare term deposit rates as it says right there on the screen. So you can put in the dollar figure that you're looking to put into a term deposit. You can do the type of deposit, so an individual, a joint, company, association, a partnership, even a government body if you are one. You can then put the interest frequency, so yearly maturity or monthly, quarterly or half yearly, and then the term that you're after. Okay, now if you don't know exactly what you're after, you can just scroll on down here and we've got them rated for you. So the term deposit rates, you can see the highlighted here is the best deposit over the shortest period of time there, which is showing us the highest deposit rate of 2.95% over a 1 year. I think 5 years you can go out to 3.2. But of course, then I haven't actually done any selected any search here or filter options here. But just scroll on down, you can see all the different comparison rates. Now, you can actually apply online through us to invest in these term deposits. Once you've completed the paperwork once, you don't ever have to complete that again to actually roll the term deposit. So you can roll it, you can switch out to a new one and whatnot. And if you ever tried to roll or switch into a new term deposit, the paperwork can be quite annoying. So this way you just fill it out once and then away you go. So that's a new feature that's just recently been added. So if you are looking around for term deposits, and also if you have listed a term deposit in the portfolio manager and the maturity date is coming up on that term deposit, it'll highlight that for you, and you can click through and search for new deposits here via this section. Now, one more thing, let's go to insurance. So the life insurance is a little known section on our website. It doesn't get used too much. Well, I guess people are coming here looking at managed funds and looking at individual stocks and all that kind of thing. Life insurance is one of those forgotten about things in the background that we always kind of just forget about and have plodding along. But this is really handy to come in and do. I was doing this earlier today. So you can see, basically, let's start off with a suburb. Put in my one, Fitzroy North, down here in Victoria. And then it'll walk you through the actual comparison, asking you a few questions to get a more accurate comparison for you. And now, if you ever want to know why they're asking specific questions, you just hover over, click on the why are we asking about this, and it'll let you know, of course, if you're a smoker, the premium's going to be higher. So for myself here, let's just click next step. And so you can see here, it'll walk you through. You can just put in a few details and it'll take you through the steps to then bring out a couple of comparisons for you and compare all the various quotes that are appropriate for your specific circumstances. So it's a really handy tool, really intuitive and quite easy to use. I won't go through the whole thing and let you know my life story there, but we'll just leave that particular one at that and go back to let's go back to the homepage here now. So that is a brief little look around the different tools that we have here available at InvestSMART. So if you do have any questions about this specifically as you're using it and you want to have a quick chat to us about it, please feel free to either come and have a chat down here. You can see this in the bottom right-hand corner. I guess you'd probably call that color of peach color, chatbot. When you click on that, there will be someone there during business hours to answer your questions. If it is outside of business hours, just write down your question and we will definitely email you back the very next day. Generally speaking, first thing in the morning, you'll get a response from us answering your question there. Now, we do have one final question that's come through. How many portfolios can you create? Really good question in the portfolio manager. So let's actually go into the portfolio manager. Now, usually we do a whole webinar just on the portfolio manager. It is a very comprehensive tool. It's a tool that we are getting better and making better and better at all times, and it is 100% free to use as well. So I've clicked into the portfolio manager. How many portfolios can you create? Well, you can create as many as you want. There is no limits to the amount of portfolios that you can create. And it's if you already have a portfolio set up in the portfolio manager and you want to create a new one, just click on the settings section here and then click create new portfolio. Now, a really nifty little tool, whilst I've got this page open, is the clone portfolio. So if you've got, for example, a super fund, a self-managed super fund, and you've got, say, then a personal portfolio as well, you might hold a lot of the same stocks across both of those portfolios. I do find that to be quite common. Now, what you can do is clone the portfolio and then just go in and make the amendments. So you don't have to start everything from scratch again. So let's quickly create a portfolio here. Let's go Mitchell's portfolio. Type, I'm gonna just say this is my superannuation, create new. Now it's gonna ask me to select a risk profile for this particular portfolio. Think about the risk profiles here as what you're wanting to achieve with your portfolio, with the goal of the portfolio. So how far are you away from getting that, reaching that target? So for example, I might be saving it for a deposit for a house. I'm going to go balanced because that's 5 to 7 years. Sorry, I did say this was going to be my superannuation, wasn't it? So I'm in my 30s. So I'm going to select high growth. And that's appropriate for an investor with a 10-year time frame ahead of them. So this tells me a bit of information about that. It tells me a bit about the returns of a high growth profile, and that's of course the Morningstar Australia multi-sector aggressive total return. So you can see here over the last 5 years that this risk profile has returned 9.77% over the last 20 years, and of course we're taking into consideration things like the GFC, et cetera, et cetera. It's done 6.78%. And tells you the best year and it tells you the worst year. So have a look at this. It's quite interesting. So moderate would be what's known as your conservative. Balanced would be your balanced, of course. Growth would be growth. And of course, aggressive is your high growth. And you can see pretty much as expected across that time frame, say look at 10 years here. The conservative has slightly underperformed the balanced has slightly underperformed the growth, and the growth has slightly underperformed the high growth. And then, of course, you're looking over here, the worst years, of course, slightly less worse, slightly more worse, and then worse as we go down. The estimated negative years here in the conservative, 1.81 negative years of performance in 20 years. And of course, as we go up the risk category, it increases. So you go from 1.81 to 5.66. So let's quickly hit next. And then I come to here where I can input all my stocks and my funds, my property, my cash, like term deposits, for example. My others might be basically any other asset class that we haven't considered in these main ones, and then your liabilities. Now, if you don't want to put in your stocks one by one, you can upload a CSV file. I know, for example, that if I use CommSec as my broker, I can get a CSV file of those of my stocks easily downloaded from CommSec, and then I can upload it here. Now, just make sure you've got the columns here that match these particular categories. So, of course, we're going to need the exchange. We're going to need the stock code, your purchase date, your purchase price, your quantity, and then any brokerage incurred for that. Now, if you can't remember exactly, that's all right. Or if you've bought multiple parcels, you can just put the average up if you like, of course, but the more accurate the details that you put in here, the more accurate the information at the other end is going to be. You then hit add or finish uploading, and then you click here, finish adding assets, and it takes you back through to the portfolio manager. And it takes you back through to this section. So that's exactly how you do it. Now, I won't go into this any further because we do have a whole webinar devoted just to the portfolio manager and how to use it, how to tweak your portfolio and get the most out of it, and then also how the tools how the InvestSMART tools that we've just been through play into the how you can actually improve the diversification of your portfolio. We've got just one more question here before we finish up. Do you facilitate opening a brokerage account through InvestSMART the same way as you can apply for a term deposit? The best way for me to answer this question is right now, no, we do not. It is something that we've spoken about over the years. It does come up basically every single year. Should we look to start like a service where people can actually buy and sell securities via our website? Now, that's right now we have not created that facility, but it is something that we have discussed, and it's something that is potentially in the makings for the future. We have now got the relationship with a brokerage house where we could potentially do that. So it's something that we are considering. But for now, you cannot actually transact through stocks through our particular platform. Now, thank you everyone for joining us today. If you do have any further questions, you can reach me directly at m.snedden, that's SNEDDON, at investsmart.com.au. Or, of course, you can chat to us via the chat function down in the bottom right-hand corner. We are there. If you don't have time to wait for your question to be answered, usually we're pretty quick at responding to them, but just type your question in anyway, and when we respond, it'll come through to you as an email, and so you won't miss out on having your questions answered there if you do use the chat section. So thanks everyone for joining me. I hope this has helped you find the tools a bit more useful, and hope that you will get in there and make the most of them, and then come and have a chat to us if you do need anything. So thank you very much, guys, for joining us, and we'll catch you next time at another InvestSMART webinar. And for those guys who are in Sydney, do have a look at the event section, because I know we have some space still available for our Sydney presentation tomorrow. It's Alan Kohler will be there, our CEO Ron Hodge, and Nathan Bell, our portfolio manager, will be there. And so far we've had a really good reception all around the country, and so please, if you are in Sydney, don't miss out on going along to that. So thank you once again, guys, and we'll catch you next time on another InvestSMART webinar. Thank you.